Right. Let's put that there. Let's put that there. Let's put that there. Let's get everybody going here. Let's get that send over here. Let's get this party started. And good morning, everybody. Good morning, and good morning. Let me make sure my screen is shared. I got to share. There it is. There's my screen. Let me say hello to everybody, and then we'll get started. Sorry, I'm a minute or two late today. Just had a lot of pre-market stuff to look into. I want to make sure I give you guys the most actionable and the most relevant data. So there was a lot to look at today. Happy Friday, everybody. Happy Friday. We got Omar, we got CJ, we got Armolfo, we got Brian, Lewis, Devin, Richard, W. Wong, Stacy, Vernon, John, Tom, Ricky, Flying Ronan is in the house, John, Joey, Corey, Glenn, Chris, Charlie. Good morning, Charlie. Happy Friday. Nathan's in the house. Timothy's in the house. Terrence is in the house. Rice, Manuel, Wayne, Robert, Dave, David, Mark, Dennis, Deanna, Ben. Good morning, Ben. Haven't heard from you in a while. Well, when I say a while, I mean more like a couple of days. Roddy, good morning to you. Hopefully, you're having a good week. Just saying hello to everybody here. We got Rich, good morning. We got Eugene. Good morning, Eugene. Frankie, Jeff, Peggy, Todd, Colleen, Ray, George, Dave, Darren, Robert, Frank, Dave, Duzzy, Jody, Cam, Stephen, Mark. Good morning, everybody. Hey, Penny, how are you? Beyond Random, yeah. Thomas, Ralph, Steve, Susan, Penny, as I said, Jesse, good morning, everybody. William, hope your knee's okay, Penny. Rose, Scott, Jerry, good morning, Jerry. We never have any Jerrys around here. It's kind of weird. Let me turn on my fan one sec. This room has no open windows, so it gets a little stuffy sometimes. William, Claire, happy Friday. Rosalind, hello there. Free fall because of expiration date. I don't know about that. Good morning to you. Cam, uh, bear with me. Customer service live today. My internet provider is doing work in my neighborhood. Outage possible. No problem. And by the way, I was on customer service live yesterday. We had about 100 people. It was a really nice session. Definitely something I'm going to be doing once a month. It was a lot of fun. Thank you for having me, Cam. It was a pleasure. It was very, very nice. Hey, Eduardo, how are you? You know, I knew somebody with your name, Eduardo, who worked for me as an architect about 20 years ago, but they lived in LA. I'm assuming you're not that same person. They were from they were from Uruguay, actually. Great guy, great guy. Anyway, I'm sure there's a lot of Eduardos out there, but anyway, Mazen, hello, Michael, Dave, a key Hawk fan, Sylvan, yes, happy quadruple witching, Tim, Ron, Art, Robert, Henry. Hit the like button, guys. We got Richard from Puente Gorda. How are you, Richard? I don't think I saw you yesterday. Eduardo, doing great. Okay, I figured that was the case, but I figured I would ask. All right, we got a couple of hundred people in here. Yesterday we broke our record. We had 610 people from what I remember. Um, the most important thing I want to tell you guys before we start is please don't panic. Okay? Don't panic. And most importantly, and I said this to you guys 3 days ago, please don't try to be a hero. What does that mean? Don't bottom pick. Don't up pick. Don't guess what the market's going to do. Follow a very, very simple process that I'm laying out for you here in the morning, and you will be okay. Notice I have not initiated any new positions yesterday. And a lot of guys did. They were thinking the market was going to bottom, the market was going to go up. Wait. Sometimes doing nothing is the best thing you can do. Okay. Sometimes doing nothing is the best. Doctor was sick. Who's doctor? DR? Who's DR? I don't know who DR is, Rochelle. You'll have to tell me. But good morning to you. Let me know. And folks, give us a thumbs up if you are enjoying this and if this is helping you. By the way, I will be doing a different seasonality webinar today, not the same one I've been doing last couple of days. And be giving you my number one stock for December. This is going to be a different webinar. It's not going to be the same webinar. It's not going to be the same service or product. I definitely highly, highly recommend you guys check it out. It'll be at 1 p.m. today. I will be I've been doing this for 31 years, and I'm going to give you a stock that for 27 out of those 31 years has made over 11% during the holidays, okay? I'll give you the ticker and I'll give you some more info on that. That's happening at 1 p.m. It is not the same webinar we've been having the last couple of days. It's completely different. It's all new stuff. Check it out. There's the link. There's my VIP room. And let me get you customer service live. The Cam and Gustavo show. And then we'll get started. We'll get started right now. All right. Here's the link for this. Now, I am going to be leaving for Miami tomorrow morning. Okay. I will be working next week. I will be around next week. I won't be doing as much live stuff, but I will be live on Monday and I will be live on Friday. I will be working from Miami. I'm taking my little monitor. I'm going to send you guys actually a traveling video of things that have helped me when I'm trading on the go. I'm going to send you a little video to show you the tools that I used on the road that have helped me quite a bit. So expect that over the next 24 hours or so. I want to do that before I leave. Now let's get into the market. All right. Let's get into the market. First things first. We have a big report that's coming out in 21 minutes. I've highlighted for you the most important parts. Now, this report, you see this core PCE index? This is now, if Powell was honest with us, he would tell us that we're not making any progress. All right. Because look, personal consumption expenditure is a major portion of personal outlays. Okay. PCE, we want this number to go lower. We want to spend less money, right? We want deflation. Well, look what it was a year ago, 2.3, and look at what they're expecting right now, 2.5. Look at the core, 2.8 a year ago, now it's 2.9. So when he tells you things are getting better, I don't know what planet he lives on where the expectations are already worse than they were a year ago. And this is why the market. Now, folks, if I'm telling you this, I'm not the smartest guy in the drawer. I'm not the sharpest pen in the drawer. If I'm telling you this, then a lot of hedge funds know the exact same thing that I'm pointing to. And they could see that the bond market is falling down. If you think we're all that special here and we have a secret to success, we don't. All we're doing is just interpreting the market from the eyes of I go every couple of years to Miami for the holidays. I was going to go to Puerto Rico, but they don't have a direct flight. So I don't want to, I'm not in the mood for hassle. So I'm just going to go to Miami and wait for Puerto Rico to have a direct flight. It's seasonal, and then I'll go back. Um, all right. All right, Rochelle. Hopefully you won't need a doctor today. So again, this report is coming out in just a few minutes. Well, it's more than a few minutes. And then we have consumer sentiment. Consumer sentiment is not going to impact at all today the market. I could promise you that. I wouldn't even be surprised if it was just like not even a blip on a 5-minute chart. Why? Because there's so much other stuff going on that's determining our sentiment right now, which is the market falling apart. So that's really what it is. We also have quadruple witching. We are going to be setting the VWAP to this date in a couple of days. It'll be our continuation. It's going to be called the Passover or the carryover VWAP, where we go from the election to the quadruple witching. We're going to keep the election VWAP on, and we only need to put these VWAPs on the major indices. You don't need to put all these VWAPs on your stocks. For your stocks, the only VWAP you need to look at is year to date, quarter to date, and earnings. That's the only thing you really need to pay attention to. But on the broad market, you need to put some more VWAPs on. Okay. Can you say where in Miami, in case we want to say hello in person? I'm going to be staying at the Lowe's Hotel. I'm staying at Lowe's in Miami Beach. I'll be there from tomorrow till Thursday. Yeah, let me check here. Yeah, right here. Yeah, I'm driving tomorrow and I'm driving back on Thursday. So, all right, that's that. All right. All right. So folks, we're going to be paying attention to this. Now, quadruple witching is option expiration. Usually you have a lot of volatility. Um, Wilford, they say it's gonna get cold here over the weekend. They're expecting 40s and 50s, but in Miami it's supposed to be 60s and 70s, which is supposed to be really, really nice. Really, really nice. So, anyway, where was I? Oh yeah. So we're going to have a big report. Quadruple witching. Even if even if the market was not in turmoil today, we have to respect that quadruple witching is a big, big day for monkey business. A lot of institutions have options and they want these options to be filled. So what they'll do is they'll drive the market up and down, back and forth to get the price. So even to add more fuel to the fire, aside from the global volatility we are seeing. Hey, Rikusin, did I pronounce your name right? We have that. So again, we have it's going to be a lot of monkey business today. My suggestion for you, and I'm going to say this several times, and I've said this several times, please don't be a hero. What do you mean by that, Roger? Don't think you're smarter. Don't think you're smarter don't think you're smarter than the market. Don't think you know better. Don't think you can pick the lows. You don't know how far this market is going to go down. We don't predict, we react. Okay? We wait for a move and then we get in on the follow through. We wait for a move, we confirm the move, and then we get on the follow through. That's how we operate around here. Okay? We wait for a move and then we wait for it to consolidate and we wait for a follow through. Remember, I always draw this for you guys. Right? Remember that? That's what we do. We wait for the move and then we wait for the follow through. We wait for the move, we consolidate, and then we get in on the next one. Penny says, my first snow, 4-letter word today. And oh, can't wait to get back on our place in Florida, but that's not until late February. Keep us posted, Penny, and we're definitely going to see each other in late February. I'm doing a live class last 2 days of February. Richard will be here. Penny will be here. I'm hoping Ken will be here. A lot of my regulars will be there. I hope you guys can come in person. If not, it will be televised. And if you're not here, I'm not one of those guys that walks around the stage. I sit in front of a computer. So you do get pretty much as much value being at your home on Zoom as you would, except you're not going to hear all the questions. But I don't walk, like I know a lot of guys, they walk around the stage, they go outside. Like, you know how I like to chat with you guys? When I'm doing a webinar, I'm like really focused. I'm sitting in one place. I don't move. I'm on the mic. So my live webinars, funny enough, are really, really high quality because I focus so much on them as opposed to like everything else that's going around. When I'm here with you guys, I focus on you, but when I'm live on a webinar, I focus on the webinar. Bond market. The bond market, what we want to see today, folks, what we want to see on the bond market today is we want to see the bond market trade above 88.50. I want you to write this down. Good question, right, Rich? So right here, we want to start seeing a gap fill. Okay, you see this gap? This is what's causing the stock market to off its rails today. And look at how high the volume is too. What we want to see is we want to see this walk its way back. Okay, that'll be the first sign that what we're seeing right now is drying out. Okay, all right. So the first thing, bond market. Bond market. Is the bond market going to trade above 88.50? That's the TLT. Now you could use the long bond, you could use whatever you want, but you want to make sure the bonds start trading above yesterday's high. Okay. Crude oil's not really doing anything. It's not being impacted by this yet. I mean, it's a little weaker, but not really much. Although, on the other hand, if you look at crude oil stocks, They've been taking it under the chin. Remember, energy stocks and crude oil, energy stocks have a lot more than crude oil to deal with. But we've been following them for a few weeks now as they're breaking down. Nothing's going on here. U.S. dollar with the bond market going lower. Finally, we have a down day, a little bit of a down day. Is this really a down day? Well, I don't know. We made an all-time high today. So we made an all-time high overnight, and now we're starting to come back. But I mean, this is me being very nitpicky. This is about as bullish of a trend as bullish of a trend is. So the big picture is we're really bullish on the U.S. dollar. But I'm just giving you heads up that if the bond market starts breaking higher, you're going to get a little bit of a reprieve here on the US dollar. Are people starting to put their money into the gold market? No, they're not. Gold is now below the 100-day moving average. Remember what I warned you? If the bond market breaks down, it'll embolden the US dollar. If the dollar, excuse me, I got hiccups, gets emboldened, gold is going to go below the 100-day moving average. Now, it may just stick around here and consolidate and start going higher, but I would not be buying gold. And you may or may not remember, I know a lot of you have fuzzy memories, so I'm going to remind you. I told you not to buy gold right here. Right here. I told you about 2 months ago. No, excuse me, about a month ago, about 40 days ago. I told you not to buy gold till we're above this key level, which is 2781. Remember that? Just like I told you not to buy semiconductors unless the semiconductor is above this level, or SMH, unless the semiconductor is making an all-time high, or semiconductors are above 265. And as you can see here, they're not. Okay. Hey, Patrick, aloha to you too. Aloha to you as well. Let me repost this again. I'm going to give you a ticker that's rallied for 27 years out of 31 years, an average of 11%. And this will be a fun class. I have not done this class yet. It'll be a lot of fun today at 1 p.m. This is not what I did earlier in the week. I repeat, this is not the same class that I did earlier in the week. Here is this. This is VIP room at noon. And don't miss the Gustavo. Don't miss the Gustavo and the Cam show. Let me give you a link for that. And that's it. Now, speaking of semiconductors, just wanted to quickly show you that look at where we're at this morning. Look at where we're at this morning. This is not looking pretty at all. And that's already after Micron found, this is even afterwards. What I'm hoping for that today we see a bottom and that the bond market starts moving up, and volatility. I want to show you guys something else. I want to show you something. So a little trick for you guys. This is something you may want to note, okay? There's two ways to look at volatility. There's VXX. This looks at the futures market. Remember, the futures market always anticipates. The cash market always reacts, right? The cash doesn't have a futures. The futures anticipates what's next, what's next. This is the volatility for futures. And if you look here, you will see this line here. Over the last year, we've come to this level a few times and we couldn't break it. And we're right now right at that level. If the stock market starts going up in the morning, and if this starts dropping, and if bonds, I'm trying to give you a play-by-play, okay? It could be big, Rich. It can be big. And to the downside, too. It can be big to the downside, too. Remember, we have a report coming out. So again, and that report could be a major catalyst. That report could be a major catalyst, one way or another. But I'm just letting you know, if you start seeing, I'm giving you tea leaves here. If tea leaves, if we start breaking higher on the bonds, and if volatility starts breaking down on the VXX, it'll look good. Now, if you look at cash, which is just reacting to the S&P 500 market, you will see that volatility is up here. Another major clue is we're lower right now on the market, right? We are lower right now on the market. Look, let me show you. We're lower. We're breaking down right now, right? We're breaking down. We're at the 100-day moving average. You see how this is lower, but you see how volatility is not higher. So far, the market is discounting the current downside pressure that we're seeing today. The bond market is not reacting. Volatility is not reacting, either the cash or the VIX. That is pretty positive. That is pretty positive. Um, hey, Brian, good morning to you. Good morning. Hope you are well. Hope you are well. So again, you're going to keep an eye on this today. And if VXX starts going down, good way to catch up, right, Brian? And by the way, guys, we have 505 people here, and we only have, let's see how many thumbs ups do we have. We only have 136 thumbs up. How about giving us a couple of thumbs up if this is helpful to you? I don't think anybody in the morning right now is live at 8 a.m. telling you exactly what to look for, the specific levels to look for to decide whether today the market's going to continue going lower or not. Okay. If there is, let me know their names. I'd love to catch up on that too. And remember, we have a report coming out, a live report coming out. Remember, my job is not only to help you make money, my job is to help you avoid losing money. I got a great email yesterday that says, Roger, one of the things you do that a lot of folks don't is you help avoid me losing money. Okay. So, China, what is China doing through all of this? Absolutely nothing. Absolutely nothing. Look at that. I mean, nothing. Nothing. So no love from China. What about Bitcoin? What about cryptos? Money's not is not coming into Bitcoin. As a matter of fact, we are now past the election VWAP level right here. Let me see something here. Yeah, we are now past the election VWAP level. I don't know why this has the VWAP at this date though. Hold on one second. That makes no sense. Huh, that's weird. I'll have to look at that later. That makes no sense. Eighth, it should be right here. Let's see here. Yeah, 11.6. Why does it not do that? Look, I have it at 11.6, but it's doing it at 11.8. Really weird. That's really weird. I haven't seen that before. Anyways, close enough. But either way, either here or here, price hasn't moved much here. We're below the election VWAP level. And this is not good. What I'm hoping for is this level will hold and will start coming up. But till we're back at the 8-day EMA on the major indices, there's no soup. About cell phone deals, Baidu dropped 4%. Yo, Baidu, let's take a look at Baidu real quick. Yeah, Baidu's still dropping. Still dropping. All right. Good morning, Eagle Beagle. All right. I'm glad this is helpful to you guys and keeping you out of trouble. So be careful. Money's not flowing into Bitcoin. Money is not flowing into any assets right now. It's floating out of the market. All right, let's put everything together and then let's look at the indices because I have a lot of momentum stuff to talk to you about. It starts at 1 p.m. Here, let me give you a link for that. And I'm revealing this for the first time. It's happening at 1 p.m. This ticker has a 11.6% win rate on average around Christmas time. So it'll be ho, ho, ho for 27 years. For 27 years. All right, let's talk about the reports. So remember, we have a big report that could be a major catalyst. Yeah, it's hard for me to see it too, but you don't have to worry about it right now. Basically, what you need to worry about is the fact that we're below. It's right here. It's this level right here, but we're below that level right now. So cryptos are not really doing. Nothing is really moving higher right now. Let's put it that way. Okay. All right. Let's go through all of this. I made it bigger for you guys so you guys could see it too. Although I'm sharing my entire screen, so let's see here. Uh, we're not going to have a government shutdown, guys. So just FYI, and that's not why the market's moving lower. But we are down quite a bit today. Let's see how much we're down. We're down 217 on the Dow, which is not random, and we're down over 300 on the Nasdaq, which is way beyond random. All right. Um, Here we go. Trending down. Morning sentiment took a hit on worries about a possible U.S. government shutdown, while investors await the Federal Reserve first line inflation gauge for fresh clues on its policy outlook. That's going to be in about 4 minutes. I have my TC 2000 ready to go right here. We'll see how the bond market reacts. States faced renewed policy uncertainty on Thursday evening after the Republican-led House rejected a temporary funding plan by Trump. Dozens of Republican lawmakers opposed the deal. They'll come up with a deal. Trust me, they always do at the last minute. They always do at the last minute. Yesterday, the market didn't do us any favors. Lamb Weston, health consumer staples, down 20%. Consumer staples down 20% on a day like yesterday is not a good sign. Micron plunged 16%, didn't do semiconductors any favor, and today they're down quite a bit. Lennar Homes slid another 5%. I've been talking about the stock nonstop for the last couple of weeks. Darden Restaurant Consumer Discretionary did well. That was the most bullish sign to offset this, but as you guys know, we didn't do much of an offset. And by the way, let's see how we've been doing at night. If we've been creeping up or creeping down. Just want to take a quick look here. So this is at night. We gap down and we've been going down all night, or kind of steady, holding steady. And VIX is going up. But what about the Dow? Just holding steady. Notice this gap is not getting filled. Bond market, let's see. Bond market's going up, which is great. So that's the first sign right here. First time. Look, since we had the puke, the first time the bond market is. So I'm hoping that the bond market will keep going. I'm hoping the report is good and the bond market will keep going higher and it'll change the sentiment. It happens every year. Every year, Angie, it happens. And nothing is going to happen. I promise you, nothing is going to happen. No government is going to shut down. It's not going to happen, okay? The third Thursday, the GDP growth estimate was revised upwards in its final print, stronger than the expected of no change at 2.8. That's not good. November existing home sales rose to an 8-month high. Very nice. Very, very nice. Better than expected. And permits are looking good too. Manufacturing index unexpectedly fell to a 20-month low. And number of Americans filing unemployment is fine. I don't like the fact that manufacturing index fell to a 20-month low. That's very, very bad. I don't know. Maybe somebody here who's an economist can tell me do you guys remember how much it fell during COVID? Because it's at a 20-month low. I'm curious. I don't have the graph for this, but I will try to have Matt find it for the VIP room. But I'm curious how manufacturing fell. What I'm also concerned about is the fact that if manufacturing continues falling, crude oil is going to have less demand. Okay, so just FYI, that can be very important. Okay, just something to pay attention to. Okay, all right. We have 90% probability that the Fed is not going to take any action. I think that now we have to start pricing in the odds that the kid is going to get his bike taken away. Every time the kid is riding his bike, he's now looking over his shoulder for the collection agent to come and pick up the bike because the parents have not been making their payments on the credit card bill. There you have it. So the story changes. The parents have not been making their payments. They've been late. They've been getting the red notice. The kid, the collection agency's riding around the block, and they're ready to take the kid, the bike away from him. All right. The tow truck drivers is circling the block. The parents got the red notice. The kid may get the bike taken away, and all his friends will laugh at him. And Powell doesn't want that, but the market knows that problem. He's not smarter than the market. That's one of the reasons why the market fell apart. The kid may have to give his bike back. What does that mean in plain English? Rates may be going higher, not lower. Surprise! We didn't see that one coming, right? We didn't talk about that like for days and days and days, right? Right. All right, let's see what TLT's doing. TLT's going higher. TLT's going higher. This is good for us. This is really good for us. Warning shots have been fired in a good way. See how it's filling in the gap? Let's see what volatility's doing. going down. See that? That's good. That's good. Now the collection agent is 3 blocks away. He's not around the corner. He's moving away. He's moving away. He was getting really close. See, SPY's really moving up. See what I was talking about? If TLT goes up, VIX will go down, SPY will go up, QQQ will rally. So now, for the first time in the last 12 hours, we're right at the open. We need to start filling this gap and start coming up. I'm going to take the a guess that the news was better than expected. Let's see. Where are my highlights? Where's my highlights? Who moved my cheese? Who moved my cheese? Okay. Core PCE, same price index, worse than it was a year ago, but better than expected. So this report is better than expected because worse than a year ago was already priced into the market. So this is better than expected. We have our first relief shot, guys. The question is, how much will it give us relief? But this is a good news. This is really, really good news. Look at the bond market. This is good news. We have some good news. Finally, we have some good news. Finally, finally. Will it help? We will see. But look right here. You could see right here. They were expecting a year ago was 2.8, we got 2.8. A year ago was 2.3, we got 2.4. Powell's full of you know what when he says things are getting better. They're not getting better, but we were expecting 2.5, we got 2.4. Let's move on. Things are looking better than expected. They're expecting for quarterly event, quadruple witching, not triple witching, quadruple futures too, during which derivatives, equities index, and futures prompt expire. About $6.5 trillion worth of options are going to expire today. We're looking at the core personal consumption expenditure, which already came out. Well, that comes out at 10 a.m. We don't have to worry about it. But so far, we've got a first report. It's good. Europe is not giving us any relief. Europe is down because, well, can I say it now, or are you guys going to get political on me? Remember, I said it 3 weeks ago. You guys wanted to write me out of your will. Remember that? Tariff threat to the European Union dampens sentiment in the region. It's not what he's going to do. It's what we perceive he's going to do. It's called sentiment. U.S. President-elect Trump issued a new trade warning to the EU, suggesting a social media that he might impose additional tariffs unless it increases its purchase of oil and gas from the United States. Yeah, this is not going to be good for the European economy. This is going to sink the European economy, which will in fact sink us. This is not good. I hope somebody's giving him some good advice. But again, they're not reacting on whether this is going to happen or not. They're reacting on the fact that he's saying it. Okay, the market doesn't think 3 steps ahead. It doesn't do that. Okay, China. I'm not even going to read this. I'm just going to show you this graph. There's nothing happening in China. Nothing happening in China. All right, let's continue. Japan closed lower, not helping us at all. Digested stronger than expected inflation data from the country. Bank stocks led to decline. That's very bad. As domestic bond yield dropped across yield curve. Basically, the world is now. Now, interestingly, when the market did this, Europe did not really, and foreign countries didn't really drop much. But on this, they did. All right, let's continue. Let's continue. Nike, one of the biggest consumer discretionary companies in the world, did not do well. Revenue guidance overshadows. Revenue guidance always overshadows the actual number because that's future sentiment. The actual number is already known. FedEx transports climbed. That's really, really good. Lamb Weston fell, not really good. U.S. Steel slumped. Well, manufacturing is at a 20-month low. I mean, I'm not expecting anything good for that. Tariffs are, Dave, you keep telling everybody that, but again, he still doesn't get it. Dave, please stop telling me to relax. Please. Please stop telling me to relax. Don't you think I know that? That's not how things work. That's not how things work. Look, this is how things work. He says something, the market goes down. The market doesn't think 3 steps ahead. Guys, the market is no dumber than your dog or cat. The market doesn't extrapolate. The market, cause, effect, cause, effect. What he's really, look, look, is the government really going to shut down? No. Do we all know that? Yes. Does the market reacting like it's not going to shut down? No. It doesn't work this way. So please stop telling me to relax, Dave. We've been down this road before. All right? Please, please. Let's not go there, okay? Right. It's not what really happens. It's the perception of what happens. Dave, let me ask you a question. My partner in my hedge fund is the senior financial economist to President Trump's administration for the second term. Do you don't think I know what you're writing here? You don't think I know what you're writing here? You don't think I can extrapolate past it? So you writing that is not helpful. It's hurtful to people because people are going to believe the nonsense that you're writing right now. Okay? So please don't do that. The market doesn't work. The market doesn't think 3 steps ahead. The market can barely think 1 step forward. Okay. Another one, another Einstein. All right. So let's now move to important things. So let's now talk about important things, okay? This is not political. This is perception. We only care about perception. We only care about perception. Perception. Perception is what drives price. Most of us knew that COVID wasn't going to end the world, but tried telling that to the market a few days before the news came out. Remember how the market fell? Perception. Perception is what drives price. Perception, not reality. Reality is the conclusion. All right. Let's get to the good stuff. Perception is our reality. Yeah, you tell that to your trading account, Dave. Tell that to your trading account. Tell that to everybody in Europe right now, okay? Good luck with that, Dave. I love these economic quarterbackers. Like, folks, my partner is the senior financial economist to President Trump's administration. Do you think there's anything that I don't know that's going on in the White House or that's going to happen? Think about what you're saying right now. All right. So let's now talk about reality. The 20-day moving average. We have the S&P 500. Folks, this is important. I want you to pay attention to me, okay? Because this is reality that we live in right now. We're looking at weekly data going back 5 years, okay? In the S&P 500, the number of stocks in the S&P 500 trading above the 20-day moving average, which is a short-term momentum indicator. It's not a long-term investment indicator, is now at 8%. How many times have we been here in the last 5 years? How many times have we been here in the last 5 years? Most importantly, what's the reaction from this and how fast the reaction happens? I'll do the interpretation for you. The usual reaction is a 3 to 4% move up in the market. Where would that put us? All-time high. Where are we right now? Do you guys see the levels we're at? Is this important? Good, Brian. Glad to hear that. How important is this to you? Yes, exactly, Michael. You see this? All right, now let's go to monthly. Let's go to 10 years. Look at how many times we've been here on a monthly basis. What is this telling us? That means momentum levels in the short term are extremely overdone. Extremely overdone. Roger, does that mean it's over and now I can go and invest everything? No. Look how long it takes to recover. It could take a little time. This was the COVID right here. This was 2022 right here, and this is currently. We can go a little lower, a little bit, not a lot. I mean, a little bit. And then This is monthly over 10 years. Do you guys want to go 15 years? It happened in 2010. It happened. So it doesn't happen very often. Do you guys see this? Is this helpful to you guys? Is this helpful to you guys? Or do you want to talk about some cockamamie politics that may or may not happen? All right. This is the bottom line, as I like to call it. Now, is this the end all and all that? No. Well, let me show you something. 30% of stocks are trading above the 50-day moving average. Only 15% of stocks are trading above the 20-day moving average. Only 15%. Now, does that mean the market's in a crapper? No, we only have 50% of stocks trading below the 200-day moving average. So investment-wise, long-term value-wise, we're not overdone yet. In the short term, we desperately need a bounce. We desperately need a bounce. Okay? Eduardo says, yes, yours, the best morning show. Thank you. Now, here's the problem with that wrinkle. The call to put ratio is not there yet. We're not there yet. There's not a big panic of people buying puts right now. We're not seeing that at all. Look, this is a put frenzy. This is a put frenzy. We're not there yet. So investors are not panicking yet. They're not panicking nearly as much. So this chart is the one that I showed you a minute ago is very useful, but this chart is telling us that there could be a little more panic. Okay? All right. Let's talk about the major indices and momentum. Momentum levels, folks, we're still over 500 here. Over 500. But look at yesterday. 569. We're now at 505. Momentum levels are actually getting a little bit better. But this is still telling me that the market is grossly overdone to the downside in the short term. In the short term. I'm not here to watch members' ego trips. I'm here paying for Roger's knowledge. So all you Daves go to, thank you. Please, let me do my thing. I'm trying to help you guys. Economy's okay. Everything's great. He's not going to do tariffs. Yeah. Tell Europe the Canadian president is having a nervous breakdown right now over these tariffs. Okay. Sure. Nothing's going on. Of course. All right. Yes. They don't know if it's going to happen or not. They're freaked out. All right. So 505 stocks. All right. Let's look at technicals. What is the NASDAQ equal weight doing? It's in the crapper. It's at the 100-day moving average. We have very strong support right here at the 200-day line. And if you look at the levels, the bottom levels, it looks like we're very close to the bottom. Okay? Thank you. I'm truly trying. And by the way, I don't get paid for being here an hour with you in the morning or in the VIP room. I make zero money for being with you guys for 2 hours a day. Notice I'm not selling you anything. So I'm giving you 10 hours of my time a week for free. No cost. Nobody would get upset at me if I stopped doing this yesterday. Nobody in the pit does this except me. The only reason why I'm doing this is because I care so much about you guys that I want you guys to do well. If I am telling you something, please listen to me. I've only been doing this for 31 years. And last I heard, I'm actually pretty good at it. So please just listen to me. All right. I love it. Oh, I love it, Moondog. I wouldn't change it for anything. I love it. But please, I mean, I've got something to say. So you see how the NASDAQ is now at the 100-day and the 200 days close by, and this is the equal weighted QQQ. Now, what about MAGs? I'm going to tell you guys something. When this market recovers, the first thing that's going to recover is the MAGs. The first thing is going to recover is the MAGs. Why, Roger? Why are the MAGs going to recover the first? Because look at how well they're holding on to this election VWAP. Now see how this goes right to the election VWAP. Look at how it's holding it. Look at how it barely came down. I mean, look at the mags. Look how strong they are. Thank you, Jeff. Thank you, guys. I appreciate it. I appreciate it. Let's get 600 people here. Let's get 600 people here. Thank you. I appreciate it. I appreciate it. Thank you, guys. Speaking of which, remember, I have a Santa ho 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 class today at 1 p.m. It's a brand new class. I haven't done this class in several months, like months. I've got VIP room here. We're not done yet. We got a lot more to cover today. And customer service live, the chip. Hey, Cam, how often does Chip come up there? I want people to hang out with Chip too, because Chip used to trade on the floor, and Chip is a very, very smart guy. Um, mm, one second, somebody's asking me something. Okay, sorry about that. So, what's the first sector that's going to start making a comeback? This. Are you going to be watching this today for a possible gap fill in a reversal and a possible 8-day up? Yes, you will be. What about RSP? Let's look at RSP. Listen to what Penny's saying. She used to teach trading. You're welcome, Penny. Can't be there. He might be off today. Gotcha. Thank you, Penny. Penny is a professional trader, MIT grad who puts helicopters together, and she used to teach trading. She values this a lot. If she values this a lot, you guys should value it too, because she probably knows a lot more and she understands the value of this. So look at the equal weight SPY. We're almost at the 200-day moving average. We haven't been this low in quite some time. Now, I want to tell you guys something. I'm going to regret saying this. So if I'm looking at the S&P 500, so what's lagging? What's lagging is the RSP and the blue chips. What's leading is mags, the top mags. Matter of fact, yesterday, as an investment, not as a trade, I bought 100 shares. I bought about $50,000 worth of the SPY for my retirement account. This morning, I'm going to buy a couple of hundred shares of mags for my retirement account. This is not a trade. This is a long-term investment. Again, long-term investment, trade, two different things, okay? So let me show you something interesting. Look at the chart going back a couple of years on the SPY. Look at the trend line right here. Just want to show you this trend line that I just drew. The trend line is between the 100-day and the 200-day moving average, which means in theory, conceptually, we can come down over here. The smaller trend is right here at the 100-day, right here. If you avoid all of that, if you avoid this right here, the trend is now right where we're at. Do you guys see that? Literally right where we're at. Let me zoom in real quick. Do you see this line right here? This connects the trend line. This connects the trend line right here on the SPY. Okay. All right. So what I'm hoping we will see today, is the following. All right. And folks, you don't need levels right now in individual indices. This is a time to look at the bigger picture. Okay. So here is what I would be looking at today. Here's what I would be looking at today. And I'm going to give you the full thing and then we'll turn on to stocks. What I'm looking for today is this is the 5 minute, this is the daily TLT. Okay. Will you use mags? I'm going to use mags. I'm going to use mags. But if you're looking at individual stocks, Paul, Google and Apple are leading. Google and Apple are the leaders in mags. If you want to be more specific, and uh, uh, if you want to be more critical, Roddy says, "I've asked. Your teaching needs to be more appreciated. It's invaluable and free. Thank you. You're welcome, guys. You're welcome. I'm not done yet, guys. I'm not done yet. Please let me finish." And hit the like button, please. We got, how many likes we got? We got 250 likes. I could live with that. Mags, yeah, MAGS, Mags. Mags have all of them. Yes, they're all recorded, Todd. I don't know where they are, but I'm sure Cam can let you know where they are. But it was a great session. I answered a lot of questions. We gave some examples. It was really fun. It was a fun half hour, and it was very action packed. I didn't have a lot of time because I had two webinars afterwards. I literally spent 5 hours talking yesterday. Okay, so here are the things we want to pay attention to today, guys. Please, please, please. Number one, you're going to promise me you're not going to be doing any trading, okay? You're going to be watching the market, okay? Number one. Number two, we want to see this continue moving higher. We don't want this to undo itself. We want this to move higher and hopefully start hitting this line right here. Right here, this line. On TLT, that line is right here at about 89.20, 89.30. We want the bond market to go higher. With that said, we want volatility, as I drew this for you guys. Remember, I drew this for you earlier today? I drew this on bar chart. We want volatility to peak out right here, and start going down. This is VXX, VXX. We want this to start going down. So we want VXX to start going down without breaking the high of this morning. We want the bond market. I can't be any more specific or clearer with you, okay? I can't. I really can't. I want the bond market to go up and clear and fill this gap completely right here. I want VXX to make a top and start going down. Okay. I want VIX. I want this to not take out the high. This bar not to take out the high. I don't want this coming up to VIX, dollar sign VIX, going up to 2770. I want it to break. I want it to hit the 200-day moving average, which is at 16. So I want volatility, VIX, dollar sign VIX, to go from 24 to 15. You may want to watch the replay for this today, but I'm giving you very specific things. Okay. I want MAGs. I want to see MAGs go well and close well above the 8-day EMA today. Right? That's what I want. And then I want SPY to start getting back into this area, the 586 area. The 586 area, and not touch the 100-day moving average. I want this to be like a whoops echo and just like us coming right back and defending this area right here, which would mean we would go back to the 50-day moving average, which is at 591. The first level we need to break on the SPY is the 50-day moving average. Until we break the 50-day moving average, nothing good is going to happen. That's at 591.50, 591.60. QQQ, we're already at the 50-day moving average, and the 50-day moving average is offering us really good support. So we want to now go above this level right here, which is the anchored VWAP level right here, which is 515. And then ultimately we want to hit the 8-day EMA. All right. Yeah, I like the MAGs quite a bit right now for an investment, not for a trade. I will like MAGs for a trade when the S&P 500 is above the 8-day EMA and when this is above this area, this bar right here, the 56.89 area. Okay. So I'm just giving you heads up. Okay. Now let's talk about stocks that I'm watching. Folks, I'm going to give you these stocks. My hope is that you listen carefully and you don't buy or sell any of these stocks, but you watch them very closely, okay? The sector that's on my crap list right now is healthcare. Look at healthcare. It's not looking really great. And I'm suspecting once we get up to the 8-day EMA, we're going to bounce down again. And you will also notice this has been going down pretty much with the XL with RSP. There's not a lot of strength here, and sellers are supporting this move pretty aggressively. Yesterday's recording also has a segment where I demonstrate how to set dynamic alerts. Oh, beautiful, beautiful, Cam, beautiful, beautiful. Healthcare is the sector on my crap list. Now, stocks on my crap list. Huntington Industrial. Remember, basic materials industrial are not. Manufacturing is at a 20-month low right now. And look, we got volume here. AMD and AM8 and Applied Materials, both Applied Materials and AMAT. AMD and Applied Materials are both on my crap list. Again, be careful today because if the market rallies, if this is the low, we could be looking at a pretty good. We could be look. You don't want to sell the low. You want to wait. You want to wait till we hit the 8-day EMA here. Okay. CVS is still rotten. I'm almost out of here, guys. Just a few more minutes and I'll let you go. Right here. Volume. Volume is supporting this move. Oxy is not looking good at all. It's almost at the 8-day EMA. Watch this level carefully. Watch this level carefully. Starbucks, I mentioned it yesterday, I think in the pit, really quickly. We've been very quiet in the pit for obvious reasons this week. We just basically have two positions that we're holding, and one we got into actually halfway down this route. Right now, we're right at the election day VWAP. I mean, at the year-to-date VWAP and the 200-day. You want to see more breakdown before getting in because this could be the low, and it'll trigger buys right here, and it'll come up. MD Mondelez and Pepsi. Mondelez and Pepsi. I'm just giving you related stocks, both on the crapper. And the fact that nobody's buying consumer staples on this downside is also not a great sign. Look at Pepsi, Mondelez and Pepsi. CSX. This is a Jacksonville local railroad company. But if manufacturing is not doing well, and if we have potential tariffs, this could be impacted. Folks, remember, markets are not smart. Cause, effect, cause, effect. Once, and it's always a carrot in front of you with what will happen next. It doesn't price in things ahead of time. Don't tell Matt because he's always buying this based on when Buffett is. He's big on buying energies. He hates selling energies and he hates fading Disney. Now let's look at upside. Now this is a beautiful stock. Look at this. I don't understand what's happening with it, but man, oh man, look at this thing. That is a beautiful stock. Alaskan Airlines. Tiva. Israeli company. Very high quality company. Very high quality company. HashiCorp. I would be careful with this stock, but it is breaking out. But I would be very careful with this stock. Oli. Bargain shopping. Look at that. Very nice stock. WK. I don't know. I don't know if he is or not. We'll know we'll know next quarter when the annual results come out. Actually, we'll know. You know when we'll know that BP Bostrom. We'll know that the second week of January. Workiva. I would wait for the 8-day EMA right here. And Boeing. Boeing. Can you imagine? This stock, by the way, is one of the most difficult stocks to trade. It is breaking out. It's now above the year-to-date VWAP. I would like to see a little more buying before going in, but I like what I'm seeing and I like volume, and I think this could be a nice rebound play. Again, I would wait for more upside, but it's got a good resistance support till 190, so there's more upside here. I would just wait for a little stronger breakout. So, in summary, Mags is where the money is right now, unfortunately. I wish it was here, but it's not. The S&P looks like it wants to come up. Be very, very carefully. Nothing good till we go above the 50-day moving average on the SPY. IWM between the 200 and the 100. We want to go above the 100-day. Dow, we want to go above the 100-day, and we want to go above the 430 level on the Dow. Watch RSP and watch Mags very closely. Try to avoid doing anything crazy. Okay? Please. Of the dates of your upcoming live webinar. Jack, my live webinar is going to be today at 1 p.m. And I'll be giving a stock, a Santa stock, a ho 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 Santa stock that's been going up out of the last 31 years. It's been going on 27 out of the last 31 years. So almost every year that I've been trading, it's been going up 11.6%. 11.6%. I'll be giving you guys the ticker symbol, all of it at 1 p.m. I will be in my VIP room at at noon today, as usual, going through more of this stuff and giving you more information. And if you guys need something before then or during then, make sure to visit Customer Service Live, the Gustavo and Cam show. CME, let me take a look at CME. CME has to, okay, so here, CME, perfect, anchored VWAP. It has to trade above this bar right here. See this bar that I anchored? We got to get some meat at 240 around here. Then I'll like it right here. Okay? Bye, guys. Have a great day. My email is roger@rogerscott.com. I will be traveling all day tomorrow. I will not be here all day tomorrow. I will be traveling to Miami, but I will be here all day today. And I will be going live next week on Monday and Friday. Okay? Both noon and morning. I'll see you guys later. Have a fantastic day. Let me know if you have any questions. I'm around all day today. There was an upcoming webinar where Richard and others would be there. No, that's a live. That's February, last 2 days of February, Jack. Last 2 days of February. Call customer service. That's going to be live and on demand. That's going to be my first live class in a very long time. Bye, guys. Have a great day. Thank you for joining me. Love you all. Be careful. You don't need to be a hero and jump into the market right now. Wait for confirmation. I gave you tons of things to look at today. Bye. Thanks, everyone. Have a great day. Stay safe and don't go crazy during the holidays. There's a lot of crazy